Hello, good afternoon and welcome to World Economy. My name is Blyden Kim. On World Economy today breaking, the Fed is expected to cut interest rates. We begin from there. The Federal Reserve is widely expected to cut the federal funds rate by 25 basis points today, bringing it to the 4.00% to 4.25% range. It would mark the first cut in borrowing costs since December. Set against the backdrop of a cooling labor market, the Fed will also release updated economic projections. In the United Kingdom, the UK's annual inflation rate held steady at 3.8% in August 2025, unchanged from July and remaining near the high last as seen in January 2024, in line with expectations. Lower AFAs and easing services inflation were offset by higher motor fuel costs and rising prices for restaurants and hotels and food. Meanwhile, annual core inflation rate slowed to 3.6% from 3.8%. Let's look at the charts indicating this. The chart indicating UK's inflation rates. The chart. According to the Diametrics, dropped in September to 1.7%, but by the beginning of 2025, inflation had gone to 3%, ups and downs, and finally going higher and higher to about 3.6%, being consequential, indicating a bit of a struggle for the British pound, but on the other hand, cost of commodities rising a bit. In Africa, looking at cybersecurity in Africa. Africa has made significant progress in strengthening the cybersecurity landscape over the past 8 years, from a low score of 21 in 2017 to the continent's Global Cybersecurity Index, a GCI, rose to 57 in 2024, marking a 171% increase. Let's look at an average Global Cybersecurity Index, a GCI score, the chart in Africa and the world 2017 to 2024, the chart. The rapid improvement reflects a growing government commitment, a regulatory time and framework, as well as investment in digital infrastructure to counter rising cyber threats. Indications from 2027, you look at Africa comparatively with the rest of the world. As of 2017, cybersecurity in Africa, the score was at 21, and while the rest of the world was 36. Africa still a bit behind. In 2018, an improvement to 27 scoreline in cybersecurity. The rest of the world 47. The rest of the world the deep blue color indicating the rest of the world, and by 2021 Africa 35, the rest of the world 52, and 2024 57. A massive improvement from Africa regarding cybersecurity score and how they're trying to manage cyber crimes around the continent. While Africa still lags behind the global average, the narrowing gap indicates that the continent is making progress. Quickly, let's look at FX update this afternoon. Our top currency losers are Norwegian krone, a negative 0.54%, and Polish zloty, a negative 0.37%. Australian dollar also falling at 0.26%, and Japanese yen dropping but slightly, a negative 0.02%. The euro, a negative 0.2%, and the British pound falling by negative 0.08% rather. And the gainers are led by dollar index, a 0.13% appreciation. Quickly, let's look at the financial markets, the FX market, what the price level of the different currencies are. FX market. Beginning with the Euro USD market, price level stands at 1.183 point mark. A decline for the euro against the dollar gaining ahead of the euro this afternoon. The pound against the US dollar, price level stands at 1.36 point mark. And the pound struggling a bit, but the volatility of this market quite low, a negative 0.01%. The Aussie against the US dollar, Aussie dropping 0.12% against the US dollar. The dollar doing quite fine, but the dollar struggling against the Japanese yen and struggling against the Chinese yen. While the dollar seemed to be stronger against European currencies, on the other hand, it's weaker against Asian currencies. We'll go on a quick break, and when we're back, the conversation continues. Welcome back. It is World Economy, and my name is Vladimir Kim. Still looking at the context of the market, the varying market, especially the currency market, let's also begin looking at FX market prices after looking at the Euro-USD market and the rest of the market. Let's look at the performance of a Mexican peso in the market and the rest of them. And afterwards, we'll also talk about a cryptocurrency market this afternoon, the markets. The market prices indicates the US dollar against the Mexican peso, a price level standing at 18 peso. To the US dollar, the dollar gaining slightly but no significant change in the market. The US dollar against Indian rupee, a price level standing at 87 rupee to the US dollar. The dollar are falling but slightly, a negative 0.04% against Indian rupee. And the US dollar against the Brazilian real, a price level standing at 5.29 real to the US dollar. No significant change in the market. Similarly, the US dollar against the Russian ruble, a price level standing at 83 ruble to the US dollar. The change, a negative 0.09% against the US dollar. And now to the cryptocurrency market, looking at the price of Bitcoin and the rest of the cryptocurrencies. A Bitcoin price stands at 1,161. Bitcoin price stands at 116,180 US dollars. That could have been such a cheap price for Bitcoin. 116,180 US dollars. Bitcoin falling by 655 points this afternoon. And Ether dropping 4.8 points at 4,499 US dollars. Binance falling by 1 point. Cardano, Solana, Ripple, and Polkadot all falling. So it seems to be a bloodbath, but the volatility of the market not too much. And now to Indonesia. Indonesia surprises the market with rate cut to boost growth. The Bank of Indonesia unexpectedly cut its benchmark interest rate by 25 basis points to 4.75% at its September 2025 policy meeting, defying market expectations to hold rates steady at 5%. This marked the seed rate reduction since last September, bringing the benchmark rate to its lowest level since October 2022. The decision reflects projection that inflation for 2025 to 2026 will remain within the central bank's target range of 2.5% plus or minus 1%, a stable rupiah exchange rate, and ongoing efforts to support economic growth. A recent data showed that GDP grew by 5.12% year-on-year in the second quarter, its latest and fastest pace in 2 years, while annual inflation eased to 2.31% in August. Earlier this week, the government unveiled a stimulus package worth nearly $1 billion for the fourth quarter of 2025 to boost GDP growth. The central bank expects economic growth to exceed the midpoint of a 4.6% to 5.4% range. Additionally, the overnight deposit facility rate was lowered by 50 basis points to 3.75%, while the lending facility rate was cut by 25 basis points to 5.50%. And now to global cobalt production. Looking at cobalt production. The Democratic Republic of Congo continues to stand as the undisputed giant of cobalt, holding the world's largest reserve and producing nearly 74% of global supply. Even amid persistent political unrest, the DRC's output has not faltered. In fact, production surged by 26% between 2023 and 2024, hitting 220,000 metric tons in 2024. Let's look at a chart indicating top cobalt producing countries in metric tons from 2020 to 2024 according to the US Geological Survey Mineral Commodity Summaries. Let's look at the charts. Meanwhile, Indonesia has been making waves. We'll talk about Indonesia in a bit. Well, according to the charts, when you look at the different years from 2020, Democratic Republic of Congo has the longest bar, or the tallest bar you want to call it. From 2020, price level was about 100,000 tons. It moved even further in 2021 to close to 125,000 tons, and even further in 2022, hitting about 175,000 tons, and currently with the green long bar are hitting 220 tons. But you look at the rest of the world, talking about the top cobalt producing countries in metric tons within 2020 to 2025, Indonesia, Russia, Canada, Philippines, Australia and Cuba all attempting to have their push, as Indonesia has been making waves in the cobalt industry, posting an impressive 47% jump in production over the same period. Yet despite this rapid growth, its output still trails far behind the overwhelming dominance of the Democratic Republic of Congo. And now to cobalt market price. Cobalt has carved out a place across industries from EV batteries to jewelries and even aerospace. But its most powerful driver has been the electric vehicle sector, largely fueled by China's demand. However, the tide began to shift in the third quarter of 2022 when prices started to decline amid a record oversupply. This was triggered by China, the world's largest cobalt importer, turning towards more cost-effective battery alternatives, coupled with persistent political instability in the Democratic Republic of Congo, DRC, which alone account for about 74% of global cobalt production, as earlier stated. Let's look at the charts indicating cobalt's average market price trend in US dollars per pound from the first quarter of 2020 to the third quarter of 2025. The charts. Well, according to instances from the chart, it goes up and down from 2020 average in the first quarter and second quarter, average standing about $15.4 in terms of the price of cobalt in the market, went to a peak point of $35.10 as a 2022 midway in the second quarter thereabout, before quick slowing down despite efforts from their Congo. In February 2025, the DRC introduced a 4-month export ban. The 4-month export ban took up the glut of this decline. This intervention may have provided some relief, with cobalt rebounding from as low as $11.6 per pound in the first quarter of 2025 to post a 31.9% increase in the second quarter. And now let's go to the market then and see the price of commodities while we're talking about cobalt market price. A commodity market first. Looking at the price of US crude, a price that was standing at $64 per barrel, falling by 0.324 points, a negative 0.5%. Brent, which represents Nigeria's price benchmark, at $68 per barrel, dropping 0.323 a point, a negative 0.47%. Natural gas gaining 1.55%, a gasoline price dropping a negative 0.56%, heating oil also falling, gold price dropping a negative 0.45% at $3,675 US dollars per ounce, and silver at $41 per ounce, also falling by 1.9%. Further commodity markets. A price of further commodity market indicates the price of soybeans at $1,051 per bushel, gaining 1.81 points, a 0.17% appreciation, and wheat price at $534 per bushel, falling, rather gaining 0.1%, and coal price also gaining 0.25% this afternoon, a steel price gaining 0.55%, TTF gas also gaining 0.47%, lumber price dropping 1.96 points. The price of lumber at $570 per 1,000 board feet of lumber, dropping a negative 0.34% in the market. And now to the stock market, as European stocks edge higher ahead of Fed decision. The European equity market traded higher today, with the Stoxx 50 up 0.3% to 5,390, and the broader Stoxx 600 adding 0.1% as investors awaited the U.S. Federal Reserve's policy decision. A market will also pass the Fed's quarterly dot plot projections for signals on the path of future policy. On the data front, UK inflation held steady at 3.8% in August, as earlier stated, unchanged from July and near January 2024 highs, just a day before the Bank of England's own policy decision. In corporate news, a post-annual surged 7% after unveiling a new strategy at its Capital Market Day, announcing plans to split its parcel business into two divisions, e-commerce and platforms, starting in 2026. Well, quickly, let's go to the market then and see the price level of a global stock market and their performances, global company stocks and their performances. The price of Apple beginning at $238 US dollars per share, downward by 0.05 points. No significant change in the downward direction, but Tesla falling by negative 1.03%. That's morning at 417 US dollars per share. Microsoft gaining 1.41 points. That's morning 0.28 percentage appreciation. Amazon also falling. Meta falling. Nvidia dropping a negative 1.12%. Visa gaining 0.29% for the global company stocks and their prices. J&J are falling negative 0.53%. P&G also gaining 0.78%. ExxonMobil at 114 US dollar per share are gaining 2.07%. Alphabet are falling. Goldman Sachs are falling. Caterpillar are gaining 1% in the market. Well, quickly, while talking about different markets, let's look at insights from the People's Bank of China as they move to streamline gold imports amid rising reserves. The People's Bank of China has issued a draft rule to ease gold import restriction, proposing to expand the use of multi-use permits, extend their validity to 9 months from 6, remove usage limits, and authorize more ports to clear bullions, according to reports. While quotas will remain to help manage the yuan, the reforms aim to boost flexibility rather than open the floodgates. The measures also cover export. The approvals remain rare due to strict capital controls and the bank's drive to build reserves. The move comes as China extends its gold buying streaks into 9 months, raising holdings to about 73.96 million fine troy ounces in August 12, 2025. Meanwhile, the United States has rejected India's request for consultation at the World Trade Organization (WTO) regarding Washington's 50% tariffs on copper and copper derivative products, arguing that the tariffs are not safeguard measures as claimed by New Delhi. According to reports, the U.S. told the WTO that there is no basis for India to seek consultation. Earlier this month, India had initiated the request under the WTO agreement on safeguards. This marks the third instance of India seeking WTO consultations with the US and Washington refusing, following previous disputes over steel and aluminum and automobiles and auto components. The US imposed a 50% tariff on the copper import value of semi-finished and derivation of copper imports beginning August 1st under Section 232 of the Trade Expansion Act of 1962. The measure is set to apply indefinitely. And now to the EU-Indonesia deal. The European Union and Indonesia finalized a trade deal set to be signed on September 23rd, according to reports, citing officials in Brussels and Jakarta. EU Trade Commissioner Maros Sefcovic will visit Jakarta for the signing. The agreement, part of a comprehensive economic partnership agreement (CEPA), follows a political breakthrough announced in July by European Commission President Ursula von der Leyen. Indonesia said the deal will eliminate tariff on 80% of its exports within 1 to 2 years of implementation. The report also noted that US President Donald Trump's import tariffs on both parties helped accelerate negotiations. In Nigeria, Nigeria's import profile in the second quarter of 2025 highlights a strong dependence on manufactured goods, which accounted for more than half of the total of 15.29 trillion naira import bills. Despite being an oil producer, the country still imported 2.79 trillion naira worth of petroleum products and 1.64 trillion naira worth of crude oil, reflecting deep infrastructure gaps in refining and broader energy security challenges. And now let's look at the charts indicating Nigeria's import trade and breakdown by sector for the second quarter of 2025, according to the National Bureau of Statistics. Well, a total, when it has to do with manufactured goods coming into the country, was worth about 7.88 trillion naira. Well, we see goods of 2.79 trillion naira and being other petroleum oil products, despite the country being a producer of crude oil imported crude oil and crude oil derivatives, and 1.72 trillion naira are being raw materials to the country, crude oil at 1.64 trillion naira, and on and on. Agricultural goods also are hitting a 1.18 trillion naira and even further. The reliance on raw materials import of 1.72 trillion naira also points to underdeveloped domestic industries that could otherwise add value locally. Meanwhile, categories like solid minerals 70.9 billion naira and energy goods 150 million naira contributed little to the overall import baskets. Overall, the data paints a picture of an economy still heavily reliant on external market for manufactured and refined goods, signaling opportunities for industrial growth, local refining capacity, and raw materials processing as pathway to reduce the trade imbalance. As we set to close, as South Africa sees surprise inflation slowdown in August. South Africa's annual inflation fell to 3.3% in August 2025 from a 10-month high of 3.5% in July and against market estimates of 3.6%. It remains comfortable within South African Reserve Bank's target range of 3% to 6%. Slower food price growth and steeper drop in fuel cost helped ease overall inflation. The annual core inflation rate, which excludes food and non-alcoholic beverages, fuel, and energy, rose to 3.1% in August 2025, the highest since March, from 3% in the prior month. On a monthly basis, the Consumer Price Index CPI edged down by 0.1% in August after a 0.9% increase in the preceding months. Well, statistically, it's been that of ups and downs for many countries, especially in Africa and the sub-Saharan African country. But here, we draw the curtain on today's edition of World Economy, looking at all the indices that drives the market and global economic standings. Thank you for being a part of it. My name is Bladan Ukem, and thank you for watching.